Welcome to Thoughts on Investing. Today, we are jumping right into a really fascinating and, frankly, highly debated company in the digital healthcare space, HIMS and HERS Health, ticker symbol HIMS. We're going to unpack the business, the regulatory drama, and most importantly, what the charts are telling us about where it might be headed next.
But first, you know the drill, we've got to do the important stuff. Just a quick reminder that this is for educational purposes only. It is not financial advice. The markets can be a wild ride, so please always do your own homework and only invest money you're comfortable keeping in the market for the long haul.
So, what's the big story with HIMS and HERS? It really boils down to this one question. Is this company a true healthcare innovator that's about to see massive growth? Or is it actually a super high-risk bet that's tangled up in all kinds of regulatory and competitive fights? That's the real tension here, and that's what we're going to explore.
To really get a handle on that tension, we first need to understand the company's story. What problem are they even trying to solve in the first place?
Okay, so at its core, the HIMS and HERS model is, well, it's brilliantly simple. It's a direct-to-consumer platform. It connects you with a clinician online for a quick telemedicine consultation, and then, boom, it delivers personalized treatments right to your door. The whole idea is to make healthcare easy, digital, and totally discreet. And man, has this model been a powerful growth engine. They are fueled by these high-margin subscriptions, and they're constantly expanding into these really high-demand areas, like weight loss and mental health. Plus, they've totally captured a younger, tech-savvy audience, and their marketing, it's aggressive, it's culturally relevant, they're really pushing their brand everywhere. But, and this is a big but, here's where the conflict really starts. A huge part of their early success, especially in the weight loss game, came from offering these compounded versions of popular drugs. As one analyst perfectly put it, their reliance on regulatory ambiguity was a short-term revenue driver that's now harder to sustain. And that put them right in the crosshairs of the FDA, creating some major headwinds for the company. This regulatory pressure really came to a head in this dramatic saga with Novo Nordisk, the company that makes Wegovy. So when Novo Nordisk terminated their partnership, accusing HIMS of selling unapproved products, the stock got hammered. It dropped 20 to 30%. But, and this is so crucial, reports have since come out that the two companies are back in talks. A new deal here could be an absolute game changer.
So this all brings us to the two sides of the coin. You've got the bulls who see a company that's smartly diversifying, taking control of its own supply chain, and expanding across the globe. For them, renewed talks with Novo could be the rocket fuel this thing needs. But then you have the bears. They see huge regulatory and legal risks, a ton of uncertainty around that key weight loss revenue, and of course, heavy competition. It is the classic high-risk, high-reward setup.
Okay, now for my favorite part. What's so interesting is how this entire story, the growth, the drama, the uncertainty, it's all reflected perfectly in the stock's price chart. So let's decode what the technicals are telling us. Let's start with the daily chart. You can see HIMS was in this monster uptrend that pushed it to an all-time high around $70. But after hitting that peak, the momentum just died. The price broke that clear uptrend line, and that's led to this sustained pullback we're in now. And notice this right here, the pink line, that's the 21-day moving average. It crossed below the 55-day. That's a classic short-term bearish signal, pretty much confirming that sellers have been in control lately. Now, if we zoom out to the weekly chart, the bigger picture becomes so much clearer, and honestly, a lot more compelling. Just look at this beautiful structure. The stock spent years building this base, forming what technicians call a classic cup and handle pattern, which you can see traced out right here. And that pattern eventually resolved with a powerful breakout, and that's what led to that massive run-up to $70 we just saw. So what's happening now? Well, this pullback isn't random. The chart is showing us some textbook technical behavior. The price is coming all the way back down to retest the exact level it broke out from. This is a classic case of what used to be resistance trying to become new support. And what is that all-important level? It's right around $25. This number is unbelievably significant. It isn't just the breakout point from that big cup and handle pattern, it was also the company's IPO high way back in 2021. This makes it a major long-term make-or-break zone where buyers and sellers are about to have a huge battle for control. So let's bring it all home, let's weigh the massive potential against those very real risks, and just summarize the key takeaways from this whole analysis.
All right, here's the bottom line. HIMS has an undeniable, powerful growth story, but it is absolutely shadowed by real regulatory and competitive risks. That potential partnership renewal with Novo Nordisk, it's the single most important catalyst to watch. And from a technical point of view, the chart has pulled back to a critical inflection point, that $25 support level. This really puts the stock at a true crossroads, perfectly capturing its high-risk, high-reward profile.
Which, of course, leads us to our final question. With the stock sitting right on this pivotal make-or-break level, is it the powerful growth story and the potential catalysts that are going to win out, or are the regulatory risks and competitive threats going to define its next chapter? That right there is the billion-dollar question for HIMS and HERS.
If you got some value from this breakdown, please do me a favor and hit that like button, and subscribe to Thoughts on Investing for more. Thanks for watching.